Have you ever wondered how the rich continue to just get richer? Or how you can get out of your situation so that you can get in the cycle of wealth and out of the cycle of poverty? Not that you're poor, but going to work every day and being in this constant revolving system that really isn't getting you anywhere doesn't always feel good, right? So we want to be able to get wealthy. We want to model wealth. We want to do what wealthy people do because they're wealthy, right? Well, in today's episode, we're going to talk about income producing assets and looking at some of the things that you need to do so that you can get out of the rat race and into the cycle of wealth. Let's go. Okay, so here we are. We're in my house, we're in my office. Thank you for being here. I'm glad to have you, right? So, income producing assets. What are they, first of all, right? Obviously, from the sound of it, these are things that will pay you all the time, over and over and over again. You buy a thing, it pays you, and it continues to pay you, right? And there are basically just four classes. I mean, there's a lot of other things, but there's four things that actually matter, right? There's buying a business. There are commodities, which are things like oil and gold and silver and pork bellies and all those things, right? But you really have to have some money to play around in there, even if you're, doing options. And you have to know what you're doing to do that, right? There is dividend stocks, meaning stocks that you can buy now and they will pay you a dividend every month or every quarter or however often that particular company or industry pays their dividends. And then there's, of course, my favorite, real estate. And now we're coming into a market very similar, not just the same, but similar to what we saw 13 years ago. I don't think we're going to see house prices be as low as they were then, but we are going into a recession. And because of COVID and the things that are going on with COVID, people aren't working. And if people aren't working, they can't make money. If they can't make money, they can't pay their bills. If they can't pay their bills, inevitably what happens? They get evicted. They get foreclosed on. All of that. So you're going to start to see as this year progresses. I mean, we're here as we're recording this right now. We're in January of 2021, and we are looking at moratoriums on evictions and moratoriums on certain kind of foreclosures, meaning the kind of lender that it is. So once that's over with, people are going to be so far behind the eight ball financially that it's going to make more economic sense for them to either sell their property or just let it go. Just let it go. And this is a great opportunity for you. It doesn't matter if you've got money. It doesn't matter if you have credit. This is an income producing asset that if you learn how to do it, you can talk your way into opportunities over and over and over again, and they will pay you month over month over month over month. So these income producing assets, again, that I like are real estate. And how do you do it? I mean, Warren Buffett is someone who I absolutely enjoy listening to. I read his books. I pay attention to what went on in his life in the past, to model success. You want to be successful, you have to model success. I wish I could call him up and say, hey, Warren, tell me what I should do in this market or with this, situation that's going on. But I can't. So I have to look at what he's done and other people like him and say, oh, how can I do that? I mean, this is a man who just built businesses. He just bought into businesses over and over and over again, all of which had something to do with another, but that's another story to tell, right? But his take on real estate is really interesting. Let's take a listen.
If I had a way of buying a couple 100,000 single-family homes and had a way of managing, the management is enormous. Is really a problem because they're one by one. They're not like apartment houses. But I would load up on them, and I would take mortgages out at very, very low rates. But if anybody is thinking about buying homes, 5 years ago they couldn't buy them fast enough because they thought they were going to go up, and now they don't buy them because they think they're going to go down, and interest rates are far lower. It's a way, in effect, to short the dollar, because you can take a 30-year mortgage, and if it turns out your interest rate's too high next week, you refinance lower, and if it turns out it's too low, the other guy's stuck with it for 30 years. So it's a very attractive asset class now. Literally, if I was an investor that was a handy type, which I'm not, and I could buy a couple of them at distressed prices and find renters, I think that's, and again, take a 30-year mortgage. It's a leveraged way of owning a very cheap asset now, and no, I think that's probably as attractive an investment as you can make.
How about that? I mean, this is a man who is just doing his thing. I mean, look at what Bill Gates is doing right now. Warren Buffett is someone Bill Gates talks to all the time. Bill Gates is the largest individual farmland owner in America, possibly in the world, I don't know, but definitely in America. Now, that is not by accident. That is by design, because of the needs of things in the future. They always tell you, buy land. They're not making any more. And we've heard that growing up, but how many of us actually did it? Outside of maybe buying our own house, how many of us actually bought land or other property and we're just holding on to it? We're just holding on to it. Not many of us. But these are things that we absolutely have to think about.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time.
Now look, during the financial crisis, the recession, which was very close to a depression of 2008 and 9, I lost everything coming out of that. I mean, absolutely everything. I lost more than I care to share right now, but I lost everything, and I had to rebuild, not just financially, but emotionally, spiritually, just mentally, everything, because that is a devastating thing to have to go through, and your entire family is going through that with you. So you still have to get up, and you still have to make money. You still have to make something happen. You still have to provide. So I got up with nothing but my ability to do real estate. I knew real estate. So I got busy. And for a long time, I was not a fan at all of single family ownership, but now in terms of rental properties. And that has everything to do with the management aspect of it. But wait. Once you figure that part out, everything else goes on autopilot. And that's a conversation we can have for later. But I got busy. I got out there and I didn't have any money and I didn't have any credit anymore. And I needed to figure out what to do. So I used all these no money down strategies, my negotiation skills, and I found my way into deals. My very first deal was a wholesale deal that I also partnered with that person to make a small percentage on the back end from the fix and flip side, because they needed someone to manage that for them. It just so happened to be like a walking distance from my house, so I could always pay attention to what that particular project needed. So I made $6,000 today on the wholesale side, and I got 30% of that deal when it sold. But what I did with that $6,000 was even more important, because at that point, $6,000 doesn't go far. So you have to figure out, okay, what am I going to do? So I took $1,500 of it and I spent it on marketing. Okay? That marketing brought me deals for the next 2 or 3 months. I mean, I spent more money in the next month as well, but for the next 2 or 3 months, off that one list, I had deal after deal after deal coming in. Now, I'm not going to sit here and tell you it was, I did 20 deals out of that one list. No, I did probably 5 over the course of a 4-month period, maybe 6. Can't quite remember. It was a while ago. But the next deal that I got was an opportunity to have a rental property. but I didn't have enough money to get in that deal. So I went and I got a partner. And my partner and I, we went and got that deal. You know, they wanted $5,000 down, but we got away with $2,500. Okay. We took that property over. We did a owner financing deal and we lease optioned that property to someone else for $5,000 down. We got our $2,500 back, which went to my partner, and we split the other $2,500. So I made $1,250 and the property cash flowed $400 a month. So now I was making $200 a month passively. Now that doesn't sound like much. That was my very first one. Now in the 7 years since that first acquisition, our company is now generating gross revenues of somewhere to the tune, on the passive side now, we've built it somewhere to the tune of about $70,000 a month. $70,000 passively coming in. Now, I'm not bragging off of that number. That's a pretty good number. It doesn't encompass our wholesale. It doesn't encompass our fix and flip. It doesn't encompass the things that we are selling that we've had for a while and it's time to sell. That's just the passive side. But it took us time to build up to that. We have single family portfolio as well as a multifamily portfolio that currently has nearly 200 units in it. And I know that's not big. That's not big in the big scheme of things, right? But it is when you start with $300. When you start with $300 and you turn around and you see yourself 5 years, 7 years, 8 years later with, you know, you're nearly doing six figures. But we got to the point to where we were having significant passive income. Passive means that we don't really have to think about how certain things are going to go. Now, COVID definitely makes a shift. It's shifted everything, you know. It's absolutely shifted everything, but it doesn't mean it's going to be forever. So when we're talking about passive income, we're talking about acquiring assets that continue to pay you over and over and over again, okay? So you need to think about some of these things. He has a lot to say, doesn't he? I mean, he's the man. He's the man. I mean, Warren Buffett built a company, a real estate company, after the financial collapse that made him literally billions, or made his company billions and billions of dollars. It's just amazing what these things can do. So I'm here to share with you the importance today as a real estate investor of not just wholesaling, not just fix and flip, but creating things that you do once that pay you every single month, right? Because when you're wholesaling, you're deal to deal. Now, you got to start somewhere, and we still have a wholesale company. I enjoy it. I enjoy the negotiations, right? But if I stop, if I can't get up and go do things, you know, that business stops, especially if you're just a one-man band. It's over, right? If you can't get out of bed, if you're hurt, your business is done. Now, yes, you can virtually wholesale, you can do things online, but it's still deal to deal. It's the exact same with fix and flip. There's just more money involved in it, right? It is deal to deal. Eventually, you're going to want to enjoy some time to yourself, enjoy your family, and go places and do things with all this money that you've made from all this hard work that you've put out, right? That is where your income producing assets come in handy. You know what kind of money is going to come in on a month-to-month basis, and you work with it. So make sure that you get into the description of this video and look at those links. I mean, there's a free course there for how to get involved in real estate if you don't know anything about it at all. There's information there about how to connect with me to get a free consultation, the Facebook page, and of course, subscribe to this video right here. Subscribe to this channel. You're going to love it. I've got plenty more content for you. And if you like this video and you want to know a little bit more about how you can achieve a good passive income, check this video out right here. How you can get to six figures in a year passively. Check it out right here. I'm your man, Jason Myles. See you later.